Blockchains are distributed ledgers. This is something you'll hear a lot in the blockchain world. But what does it mean? So far, we've looked at the blockchain and seen that it is distributed, with many copies of the entire blockchain existing on computers around the world. We've also looked at transactions and used Bitcoin as an example. Now, we know that blockchain is distributed, but what's a ledger and how can it be distributed? To really break it down simply, blockchain is most often used as a way of tracking ownership. For example, in Bitcoin, we track who owns how many Bitcoins. The data that we store on the blockchain are transactions that transfer ownership from one person to another person. So, we can look at the blockchain as just a giant spreadsheet of transactions between people. Now, when you think of a store, a business, or even a large government, who is really good at keeping track of transactions? It's the accountants, the bookkeepers. Blockchain takes advantage of two key ideas from this world of accounting: a journal and a ledger. A journal is a detailed account of all the financial transactions of a business. When any transaction is made, a bookkeeper enters that transaction as a journal entry. The transaction could be a sale, a purchase, or even just moving cash around. If it affects one or more business accounts, the journal entry will include the accounts that are involved. So the journal is like a basic log containing sequential records of how money is flowing into and out of the business. On the other hand, a ledger keeps track of every financial transaction as well. But instead of sequentially, transactions are organized by account and by type. You'll usually see ledgers split into things like assets, liabilities, revenues, and expenses. Now, this part is important. The ledger will keep track of the total balance in all of those accounts. So, transactions are first recorded in a journal, and then second, organized into a ledger, which includes account balances. Okay, that's the boring accounting stuff. Now, remember how blockchain stores transactions in blocks and pretty much nothing else? Well, that's exactly what a journal is: a database of transactions. Blockchain is perfectly suited for storing financial transactions, just like an accounting journal. It's the block creators or miners that are the bookkeepers, saving any new transactions to the journal. What about the ledger? I thought blockchain is a distributed ledger and not a journal. Let's find out what makes blockchain a ledger in the next video. When we're done, we'll have a much better understanding of how blockchains work under the hood. I'll see you soon.